A range of new crypto ETFs are about to launch, from a Solana ETF to a Litecoin ETF to even a Dogecoin ETF. And in my opinion, these launches have the potential to ignite an alt season like we've never seen before. In this video, I'll dive into how soon these ETFs will be launching, and it's a lot sooner than most people expect. What these ETFs mean for your alt bags. Spoiler alert, it's insanely bullish. And if we do see alts start to move up, which alts are positioned to outperform the rest of the market? And of course, I'll show you exactly why I believe that these ETFs could not only start the next alt season, but potentially usher in maybe the biggest alt season we've ever seen. And listen, I am bringing a lot of hype and some pretty massive claims at the start of this video, but I swear I have the ammunition to back up exactly what I'm saying. This is a lot bigger of a deal than most people are making it out to be. And when you think through the second and third order effects of these ETFs, I swear it is maybe the single most bullish thing for an alt season you could possibly imagine. Let's get into it. But really quick, before we dive in, if you could just click that like button, it does something. I don't know what it does for the YouTube algorithm, but too many smart people tell you to click the like button on other videos that I know it does something. So click the button. Let's figure out what that like button does, and then let's get into it. Okay, this screenshot is from Bloomberg Intelligence. You've probably never used Bloomberg Intelligence because it's around $31,000 a year just to get access to it. This is like the homepage of Wall Street. This is what asset managers, bankers, professional hedge funds, etc. use to get the most prime, the most optimal, the most up-to-date data that there is. And this page tracks the odds of approval for the top spot crypto ETF filings. And some of you guys with eagle eyes might notice that at the top it actually says ETP. In the US, we call them ETFs. In the rest of the world, they call them exchange traded products, or ETPs. And right now it's tracking the odds for a Litecoin ETF, a Solana ETF, an XRP ETF, a Dogecoin ETF, a Cardano ETF, a Polkadot ETF, an HBAR ETF, and an Avalanche ETF. And then at the bottom, it's got SUI and Tron, but we're not going to dive into those right now. And at the top, you can see there's actually a basket or index ETF, which includes a bunch of different crypto tokens wrapped up in one ETF. For example, the Bitwise 10 crypto index fund basket includes Bitcoin, ETH, XRP, Sol, ADA, SUI, Link, AVAX, Litecoin, and DOT. And you can see that not just Bitwise, but Grayscale, Hashdex, and Franklin all have different basket indexes that they're trying to get launched as ETFs. And all of those include different tokens in their basket. For example, the Hashdex ETF filing has a lot of the same tokens in there, but it also includes some different tokens like the Uni token from Uniswap. And what's insane about this chart is the odds of approval over on the right. You can see that the baskets index ETF odds of approval is around 90%. The Litecoin odds of approval is around 90%. The Solana odds of approval is around 90%. XRP is 85%, Dogecoin is at 80% odds of approval, and most of the others are sitting above 70. Okay, so this isn't just like rampant speculation that we're gonna get, a bunch of altcoin ETFs. According to Bloomberg Intelligence, the literal top tier, best of the best data research layer that you can get on Wall Street, the odds of approval for these ETFs, for quite a few of them, are sitting above 90%. And in fact, recently Blockworks issued a scoop stating that the SEC asked Solana ETF issuers to submit amended S1 forms within the next week, potentially setting the ETFs on a path to approval within the next few months. And going back to the Bloomberg terminal, we can see that actually all of these, besides the Tron one, has a 2025 deadline, meaning all of these either have to be denied or approved before the end of 2025. So there is a strong, credible case that at least some of these ETFs will get approved before the end of 2025. And in fact, according to Blockworks, we could see the Solana ETF at least approved within the next few months. And if you've been following along with developments at the SEC post Gary Gensler, you would know it's done a complete 180 since the Gary Gensler days, and now is extremely favorable to crypto, with a lot of the regulations and policies being shaped by longtime crypto advocate Hester Pierce. And the new SEC chair, Paul Atkins, has a much more libertarian view of the financial markets, meaning he believes in a lot more freedom for the financial markets and less restrictions and less regulations. In fact, recently, SEC chair Paul Atkins came out and said that the SEC is making an exemption for DeFi platforms so that they can experiment, grow, and innovate. This is in stark contrast to what we saw under the Gary Gensler SEC, where they were suing compliant crypto companies left and right and had to be consistently shut down by the court system because of their overreach when it came to regulating crypto. Basically, not only is Bloomberg saying that the approval odds of these ETFs are really high. But if you just look at the SEC and how they've shifted over the last few months, it's not hard to guess that it's extremely likely that we're going to see a ETH staking ETF or a Solana ETF, an XRP ETF, and even a Dogecoin ETF. Because the new stance of the SEC is they want to step out of the way and let the free market decide rather than over-regulating an emerging sector. And think about it this way. If they approve a Solana ETF and they approve an XRP ETF and they approve a Dogecoin ETF, then you have to imagine that by 2026, any altcoin that has any sort of demand for an ETF will see an ETF get approved. And this is actually insane and extremely understated in terms of crypto liquidity. Up until this point, Wall Street has not been able to touch or access any of the crypto tokens within the crypto space. And to be fair, 99.9% of the tokens, I'm sure they don't want to touch. But all you got to do is look at the demand for the Bitcoin and ETH ETFs to see that there's absolutely a huge appetite to get crypto exposure from Wall Street. And with the launch of these ETFs, Wall Street is now going to be able to easily onboard into most major altcoins. And these at their core represent entirely new on-ramps for liquidity to bleed from the traditional Wall Street space into the crypto ecosystem. And while I pay a lot of attention to global liquidity and when it goes up or down, etc., because that is really important for the wider crypto market, this is crypto-specific liquidity. And you need to remember that crypto is an extremely tiny asset class when it comes to like Wall Street scale. Crypto as a sector is only $3 trillion. Like if you take every crypto token, Bitcoin, Ethereum, every alt in existence, every meme coin in existence, you bundle them all together, it's sitting just over $3 trillion. Compare that to just BlackRock, one single asset manager. They have over $11 trillion in assets under management. That's like just what that private company holds on their books is $11 trillion. And the entire crypto space as a whole is just $3 trillion. So in terms of like traditional Wall Street terms, crypto is a really, really tiny sector. And there is an absurd amount of liquidity or money that can pour in from traditional Wall Street into the crypto space. Meaning, compared to the crypto space and how tiny it is, these ETFs unlock an ocean of liquidity, okay? Crypto is like a tiny pond right now. And these ETFs are like Wall Street building canals to connect that ocean to our tiny pond. It doesn't mean they're gonna drain the whole ocean into the pond, but it certainly will open the floodgates in terms of access to abundant liquidity. And we've already watched this effect play out in the crypto space. Bitcoin got its ETF, and even though global liquidity isn't going bananas like it did in 2017, 2021, and 2013, Bitcoin has been going bananas, hitting new all-time highs, surpassing $100,000 per Bitcoin. And that's been primarily driven by this institutional adoption of Bitcoin and this new liquidity faucet between Bitcoin and Wall Street's just giant ocean of liquidity. Meaning once this happens, you don't necessarily need global liquidity to go bananas for crypto to go bananas. If even just like a little bit of this liquidity is pumping into the crypto ecosystem, it gets sends prices skyrocketing, especially when you consider that like of that $3 trillion in market cap, most of that is just Bitcoin. Okay, most of that market cap is just Bitcoin. Alts, in terms of like Wall Street scale, are like, if the entire crypto space is a tiny pond, then alts aren't even a puddle. They're like a cup of water sitting on the shore of the pond, okay? Alts are such a tiny bucket today. But for those on Wall Street who are wanting crypto exposure as far as crypto as a category, they're probably going to invest in some of these, either multiple of these ETFs or one of these basket ETFs where it's, a bunch of different altcoins. So, I'm sure the baskets will be like mostly Bitcoin, some Ethereum, kind of second, and then the other ones are going to be tiny in terms of the scale of the basket. But again, those alts in terms of Wall Street are already so small that it doesn't take a lot. It doesn't take very much of those inflows coming in to skyrocket some of these prices. And if we were to get both global liquidity year over year, like skyrocketing, going up like we're expecting to happen in late 2025, plus these ETF on-ramps, that's when things get absolutely unhinged. And that's one of the reasons at the start of this video, I said that we have the potential for maybe not only an alt season, but potentially the biggest alt season we've ever seen. Because yeah, maybe we don't have 2021 levels of liquidity and everyone getting, these checks sent to them. But when you couple even a modest gain in year-over-year liquidity, something like 2013, coupled with these ETF on-ramps, that's a recipe for absolutely unhinged price action. So what does this all mean? And what are the second and and third order effects from here? Well, first off, we can conclude that the SEC is extremely likely to approve a range of these ETFs by mid to late 2025. That means before the end of 2025, we're going to see a Litecoin ETF, a Dogecoin ETF, a Solana ETF, an XRP ETF, and possibly quite a few more, as well as a range of these basket ETFs that could hold anything from what we just talked about, plus things like Uniswap, etc. Maybe they're the top 10 crypto assets by market cap. It just depends on how those baskets are set up. But that's going to be a range of other altcoins in addition to these ETFs. And the second order effects from here would be that new money is going to flow into all of these assets. So Wall Street firms like BlackRock, Fidelity are going to buy large amounts of altcoins to back these ETFs. That buying, especially because these alts are so small, is going to push prices up. And that means that a lot of money that couldn't legally touch altcoins before, retirement funds, financial advisors, etc., will now start buying into various altcoins, even further pushing up the prices for these altcoins, and then even further pushing up the demand for these altcoins. Because you got to remember that most of the world, they act like sheep, okay? When the price of an asset goes up, that is their bat signal to buy. For whatever reason, I don't know why, but when prices skyrocket, that's when they want to buy. When prices are declining or we're at a bottom, they don't want to touch it. They think it's a scam. But when prices are going up, that is their signal to go buy. And that also kicks off a massive marketing engine, which leads to part two, big media plus hype. Financial media starts covering altcoins 24/7. With all these ETF launching, with all the hype, especially with something like the Dogecoin ETF, that makes killer content for media networks, and so they're going to be covering it. So you're going to see CNBC headlines saying Solana ETF launches today, XRP ETF does this, Dogecoin ETF does that. All this media coverage, all this hype, these professional BlackRock investors, financial advisors in suits saying, yes, I believe this is going to be a sustained drive towards crypto adoption, and I expect crypto to reach blah, blah, blah in the next year, and Bitcoin's going to hit this, Solana's going to hit this, etc. All of this media is going to draw in retail investors, okay? They were told by these same people just 2 years ago that crypto was for terrorists and drug dealers, so they stay away from it. They haven't touched it because that's what they're told to do. Now these same people in Wall Street make money by selling these crypto products. So they want to sell them to as many people as they possibly can, which means they're ready to draw in the retail crowd and say, hey, actually, this is the future of finance. This is the future of tech. You need to get your money in this. You need at least 3 to 5% of your portfolio exposed to the crypto sector because this is the future of finance. Tokenization is the future. Just, go watch some Larry Fink videos if you want to see how this is all going to play out. And all of this leads to part 3, which is that altcoins become normal investments. They become normalized. This is a normal thing to hold. It's no longer, Bitcoin's this pristine asset, but don't touch those other cryptos, that's scams and for grifts and etc. Now Wall Street is making money off of selling these crypto products. And you know what? Bitcoin's been a great selling product. It is giving them, it's like a little cocaine for them, okay? It's giving them a taste of how good these crypto products can sell. And so they're going to try to find product market fit with as many crypto products as they possibly can. Because if people want to buy them, they're going to make fees off of that. And they want to make as much money as they physically possible can. And all this media coverage, all this marketing from traditional Wall Street normalizes the space. It makes it feel safe and comfortable. And if you're a financial advisor, you now have the permission and the comfort to say, hey, you should put your money into this because, even people like Larry Fink are saying you should put your money into this. So it's safe. Don't worry about it. The normalization of altcoin in the wider crypto space is going to have a massive psychological effect on retail. So once one altcoin ETF, Solana, XRP, whatever, is approved, dozens more will follow. Okay, every altcoin is going to be like, we need an ETF now because look at Solana has one, Cardano has one, XRP, and how's the SEC going to say no? Especially if something like XRP or Solana gets an ETF, how are they going to say no to anything else? And so there's going to be a crazy amount of speculation on, Polygon's going to be the next ETF, Hype's going to be the next ETF, this AI agent is going to be the next ETF. Crypto knows no bounds. Okay, every token that possibly anyone's even a little bit bullish on, people are going to now start speculating on it being the next one to get an ETF, especially if Dogecoin has an ETF. Then the doors are open. Okay, any token that can have an ETF that can sustain any sort of buying volume that the Wall Street thinks, hey, there's going to be some demand for this. People are going to try it. They're going to pitch it. They're going to launch an ETF, and they're going to see if there's demand. Along with that, you can expect leveraged ETFs. So like 2x Bitcoin, 3x ETH, or whatever. Staking ETFs is a really obvious one. We're going to see ETH staking ETFs and various other ones. Thematic ETFs, so crypto AI ETF or smart contract ETF, layer 1 ETFs, Ethereum ecosystem ETF, stablecoin ETF, everything you can possibly imagine. Any way that Wall Street can sell these things, they're going to try to sell these things. And as these things are going up, as there's more demand for these things to go up, and as BlackRock and all of these kick off their marketing engines to pension funds, etc., you're going to start seeing hedge funds, pension funds, retirement funds, etc., start allocating a certain percentage of their portfolio into altcoins. And there's going to be more and more pressure the more these things go up, because BlackRock's like, hey, you should put money into these altcoins. Tokenization is the future of finance. And if these things start going up and some hedge funds are doing it now performing, that's going to put pressure on a lot of the other wealth managers, etc., to at least allocate a small percentage, because they're human just like you and me. They also get FOMO. They also look at their peers and they say, oh, they're doing it. Shoot, maybe we should put a little bit in that as well. This also solves one of the biggest problems for these wealth institutions, and that's custody. Okay, they didn't want to custody their funds. Look at how many of these people get hacked. They don't know how to do it. Their legacy finance, they don't know how to manage a wallet and private keys, etc. And now they don't have to worry about it. Custody is solved so that they can allocate into this sector as they would anything else. And this all adds up to liquidity bleeding into the wider crypto ecosystem. Not only through these ETFs and not only through the wealth effect of these ETFs. Again, people buying the Solana ETF might not ever invest in anything on chain, but that pushes the price of Solana up. So everyone else on chain who holds Solana now has more money to go spend on other tokens. So those people don't have to go buy anything on chain for liquidity to bleed into the wider crypto ecosystem. But also on top of that, you are going to have those like that 1% of people, 2% of people who are going to try to front run all this. They're going to say, wow, look, all these people in crypto are making the money first before it hits the ETF. I'm going to try to do the same thing. I'm going to try to get on chain, get these things, ahead of time before they get an ETF launched. The market is forward looking. It likes to move fast, and people like to be positioned as early as possible. And basically the conclusion is the same thing that we've seen every single alt season. You have the tier one tokens move first. So Bitcoin, Ethereum, Solana, XRP, whatever. They go up first. They grab the headlines, etc. And then everyone says, oh my gosh, I missed out on Solana. I missed out on ETH. I missed out on Bitcoin. What's the next thing that might go up? What's the next thing that might have an ETF? And so they invest into those things. Then those things go up, and then people are like, oh my gosh, I missed out on Polygon. I missed out on Hyperliquid, whatever. But what's the next thing under those that could go up? And then they try to front run that. And then when those go up, they try to front run that. And the crazy part is, as this money rotates, because the things under successively are so much smaller, they don't need as much capital to go up. So when that capital starts to rotate downward, you see massive results where some of these things are skyrocketing to astronomical prices, because $10 billion going into Bitcoin maybe doesn't have a crazy effect at this point, but it's going to have more of an effect on Ethereum, and it's going to have even more of an effect on Solana, and it's going to have a substantially more of an effect on Polygon, and then it would have an astronomical effect on something like really small like Research Coin, and then it would have a gargantuan effect on, you get the idea, like the lower you go down, that money moves price a lot more. And finally, couple this with a lot of the other stuff I talk about on my channel, which is that like traditional environment for alt season. So traditionally, alt season doesn't come from something like this. This has never happened. Traditionally, alt season comes from global, an impulse in global liquidity. And there's a lot of things we track, like policy levers, etc., as to when that'll happen, because we know this is a part of the debt cycle. Debt has to get turned over. When debt gets turned over, or something breaks in the system, the only policy response that policymakers have is they inject liquidity into the system. I always point out that it's kind of like that green ooze you put in your bike tire when your bike tire pops. That's how they fix the financial system, and the financial system breaks a lot these days because it's under such a heavy debt load, which is why we've had these consistent 4-year cycles in crypto, and it's why we have these manias. Like you could even go before crypto, like in the 1999 dot-com bubble. Things like that come from these massive liquidity impulses that come from policy levers and government response. So we've been trying to track, when is the next time we're going to see this policy response? When's the next time we're going to see this liquidity impulse? And right now, everything's on track, or the highest probability, the highest odds right now are for late 2025. Late 2025 is the most likely point that we're to see this policy response in a global uptick in year-over-year liquidity, a big impulse in liquidity. And it also randomly happens to be the time that we're most likely to see these ETFs get approved. So a bunch of these altcoin ETFs are likely to get approved by late 2025. So between now and late 2025. So if these things coincide, you have this liquidity impulse plus these ETFs coming live at the same time, and all of these second and third order effects that we just went through. That is why I'm saying that this has the potential to maybe be the single greatest alt season we've ever experienced. This is the full recipe. We have the liquidity impulse, we have the catalyst, which is these ETFs and the narrative around that. Plus we have all this abundant extra liquidity coming from Wall Street, and you mix that all together, and it's explosive. That's absolutely explosive in terms of the potential for something like an alt season. And if you don't see it after everything that I just went through, that I don't know what to tell you, you are way too bearish and you're not going to make any money because you're going to be sitting on the sidelines. But anyone who thinks on this for like 5 seconds can see the bull case that I'm spelling out and I'm talking about. And this is insane. This is actually unhinged insane. This is like back in 2021, like before, and you're like, oh, okay, the government's going to print a ton of money. We have this huge policy response. We have all this liquidity flooding in. I wonder what's going to happen. It's kind of like that. It was like so stupid obvious back then what was going to come next. And I feel like actually, if you look at the playing field right now, it is so stupid obvious what is likely to follow after all these things come together. Like, I don't know how it spells out any other way. I can't see it. Look at the playing field. Now, if this happens, if we see this crazy alt season, what alts stand to benefit the most? What are the current alts that are primed to see a massive headwind up? Well, I think an obvious one, at least an obvious one for anyone who's been paying attention in the crypto space, would be obviously the AI sector. Okay, so anything touching AI, anything AI adjacent, is going to go bananas. All these retail investors have had no ability to invest in early stage AI. They can invest in things like NVIDIA, et cetera, but it's already massive, okay? Early stage AI, they haven't had the ability to invest in these things. They keep getting told the AI is going to take their job. There's no hope, blah, blah, blah. And they want a piece of the pie, okay? Retail craves the casino, okay? They also want to achieve the American dream, or whatever dream they have. They want to own a house. They feel like they have no options. And I think the first thing that is going to pop into everyone's head, the most obvious thing is going to be the AI crypto sector. So anything AI adjacent, I think that is an obvious play. The second thing is going to be anything that people speculate could get an ETF. Okay, so like if Solana, XRP, Dogecoin, et cetera, get an ETF, the things most adjacent to those are likely plays. So if Solana gets an ETF, I think people are going to kind of branch out and think, oh, things like Hype. I think they're going to think things like Avalanche, things like Sui, things like Polygon, things like ZK Sync, Arbitrum, Optimism, just that kind of whole category of like tokens that kind of all feel somewhat similar. They're going to be like, okay, these things might get an ETF, and that's going to be something to speculate on. And then if things like Uniswap get included in that basket, I think people will speculate, okay, it's already included in a basket. It's likely to get an ETF as well. And then they'll think second order effects. Well, if Uniswap gets an ETF, maybe PancakeSwap, I don't know, gets an ETF, or maybe CowSwap gets an ETF, et cetera. And then if you think of things like Dogecoin, certainly that does not mean that every meme coin, or even 99.999% of meme coins, could even qualify for an ETF. I think people logically can write that off and say, okay, Dogecoin is its own little special snowflake. But I think there will likely be some speculation on things like Pepe. If Dogecoin gets an ETF, maybe Pepe, maybe like in a long shot case, something like Pepe could get an ETF. Although I think as far as logic goes, that's the furthest I would take that one. And then outside of that, I think the broader utility token ecosystem, okay, the one that's been like deprived and ignored for these past couple of years as everyone's gone off and chased meme coins, I think we're going to see just a refresh and a refocus on that sector. Anything that could get an ETF, things that are like real products, they have cash flows, they're things Wall Street would actually be interested in. Those tokens are likely to go up because they now have this potential for this TradFi money, okay? So some big TradFi money to flow in. So any team that's building a real innovation, they're building a real product, they have real cash flow, those kinds of tokens, DeFi, perps, broader infrastructure, DEXs, et cetera. A lot of the things that most people focused on in 2017 and 2021, a renewed renaissance around that area. I think we're going to see a lot more focus there. And finally, with the loosening up as far as regulations around the SEC, with the SEC being so generous, similar to the early internet had this sandbox they could play in, they could do a bunch of stuff. They could actually break rules that like normal companies couldn't break, right? So they weren't paying sales tax and all this kind of crazy stuff that normal companies had to pay. We're seeing that kind of sandbox environment form around crypto where they're getting these weird exemptions, possibly this sandbox environment to play around in. I think when you have something like that, you're going to naturally see the crypto space start to evolve and start to become something more than it ever has been, because it's been heavily restricted by these regulations. And so as like a final contender, I think things like the Believe app ecosystem, where a lot of these tokens are not like crypto tokens. They're not like a new DEX or a new crypto product. They're just a normal business idea. They're like, oh, we're doing an AI startup, or, oh, we're trying to launch this robotic startup, or et cetera. It's kind of like venture capital funding using crypto rails, using crypto as like the funding mechanism for that thing. Similar to something like early ICOs. I think as we kind of free up this regulations, I think people are going to want to go back there because, everyone wants wants to be a VC, everyone wants to fund the early next AI startup, etc. And as regulations loosen and as it becomes apparent that we're headed that direction, I think you're going to see a lot more interest in that category and in that space, especially from crypto investors who maybe they've invested in like 10 DEXs and 15 perps platforms, 25 friend tech competitors, and they're ready for something different. They're ready for like, hey, I actually want to invest in like robots now. I want to invest in something AI, something different. I think that you're going to see a lot of capital flow that direction if there's an opening, if there's the ability for that to happen. And in fact, we're already seeing that start to emerge. So I think that's possibly a final contender. By the way, if you are interested in what I'm buying or what I currently hold in my portfolio, I share every time I buy and sell in my entire portfolio in the Obsidian Council, as well as weekly market updates on the market, macro, developments with the SEC, etc., and a bunch of other awesome things, including updates from my 2-week Bitcoin model. If you're interested in joining, currently the Obsidian Council is closed, but there's a sign up for the waitlist in the description of this video. As always, none of this is investment advice. None of this is me telling you to invest in anything, and you always need to do your own research. If this video is helpful, make sure to hit that like button. And if you want to see more videos like this, make sure to hit the subscribe button and the little bell next to it to be notified each time I release a new video. Thanks for watching, and I'll see you next week.